The financial sector and banks are red hot. Is it just a matter of the economy rolling along? Will it continue? My next guest is Dick BOVE. He's a sector analyst, covers the financials for Rafferty Capital Markets. So, Dick, is it that simple? Is it economy up, banks up?
Yeah, I think it is. I think that banks could be considered, even though financial companies, they could be considered to be deep cyclicals, which means that if the economy does well, they do well. If the economy does poorly, they do horribly. And at the moment, the economy seems to be doing well, and it seems like it's going to continue to do well for the next couple of years. So as a result of that, my belief is that bank earnings will continue to rise, bank book values will go up, and bank stocks will continue to go higher.
Two issues right in front of us is the Federal Reserve. Are they going to screw it up with this tapering, and then, of course, interest rates?
Well, you know, I spent a lot of time looking at tapering actually in the past few days, and what I discovered is that essentially the Fed has put so much money into the financial system that there's $1.7 trillion right now in net free reserves at the Federal Reserve. It doesn't matter what that is. What it means is there's $1.7 trillion that has yet to be spent by the banks into the economy, which means that the Fed can taper all at once. There's still a staggering amount of money that needs to come in through the banking system to the economy. So I don't think the taper will mean anything.
I know rising rates help bank margins, but at some point it also cuts into loan demand. Where's the sort of delineation point?
Well, you know, which is, hard for people to understand is the higher interest rates go, the more houses you sell. And the higher interest rates go, the more cars you're selling. So in essence, what you're seeing is when interest rates are going up, it's because employment is going up and because the economy is going up, and therefore people are buying more things, whether the houses or cars or cell phones. So the net effect is I don't think that a rise in interest rates, unless they decide to jump right through 5% on the 10-year Treasury, I don't think the rise in interest rates is going to slow down the growth in the economy.
Or the profits, because you've reported, 14 consecutive quarters of growth now?
Yeah, in other words, banks not only have had that, as you say, you're exactly correct, Matt, 14 quarters in a row of year-over-year gains in earnings, but the first quarter of 2013 was the highest profit quarter in the history of the American banking industry, and of course 2012 was the second highest profit, $142 billion in the history of the American banking industry. Banks are getting profits from everywhere. Their bad loans are going down. They are lending more money in the commercial sector. They are seeing their cost of running the business go down. They've been increasing prices right across the board on all products. And if they also, on top of all of this, get an expansion in their margins, they're going to continue to see good earnings for quite some time.